All right, so let's get cooking here. Last week when we spoke, we've been talking about the last few weeks, probably last month or so now. The way time flies by, but we've been talking about how we want to focus more on individual names rather than trying to time, market bottoms and not necessarily tops. We don't want to get too crazy, right? We don't want to buy coming off 3 day rippers, especially in individual names. If they're lagging, it's a different story. But I think what's been different that we're starting to realize is there are a good amount of names out there starting to deviate and diverge away from the overall indices. Okay, there are going to be periods in time where something macro happens or something comes out of the Fed where everything is highly correlated for a couple days, maybe even a week or so. But what we should start to see more than not is some of those names, especially the names catching the better looking flow, the order flow, because they tend to support those names, hold up better when we see weakness in the overall indexes, and will outperform a lot of times when the market may not be doing much, let alone pushing to the upside. Okay. And it's not to say that, and I've been trying to make this as clear as possible, because I know a lot of people like to trade the more active names, especially if you're trading them tactically. I'm not saying that we have to ignore these names. The problem that I run into, right, and it's me more than, it's just my personality more than anything else. I can get distracted by the overall market and the messiness that comes out of the flow in crowded names, again, like a Tesla, like an Apple, and if you've been paying attention, you see like the order flow in these active names, where especially up days, you would see sweeper activity. They just go nuts and trip over each other to get in these names. You'd get those trend days where an Apple, there'd be call sweeper every second and a half throughout the whole day and never let up. And we don't see that anymore, right? We see a lot of weekly activity. We see a lot of two-sided activity. And to be frank, the better looking action up to this point has been on the put side in these names, as far as dated activity, right? With some time. So, what happens is and I know, especially a lot of the newer traders out there, they see, let's say $1 million sweep in an Apple or a Tesla, and they get as excited as they would as we were back in the bull market, right? But in reality, that order means nothing, means nothing to us. It don't give us an edge in really any way. And that's, I guess, what I'm trying to get at as far as making a point is the edge out of the flow and the edge in general that you're used to having in these names, whatever edge you may be trading off of, right now, just it doesn't exist. It doesn't exist. They can be traded, right, on tactical timeframes, but like if you're going to trade these names, I'm put the word trade in quotations, right? I'm talking about not getting greedy, looking for, a snapback move and getting out, right? That type of trade. It's not going to be an easy trip. It's going to be a tough trip. It's going to be, pretty much equivalent to how anything's been trading for the last, since the beginning of the year in this bear market, right? The smoother rides, as I like to say, right? The smoother trip to cashing a winning ticket is likely going to come from names that the average guy, the average players aren't holding bags in, right? The less crowded names, the names that the average Joe out there, the media, they're not paying attention to. And you can see that now, all over the place. At first, like maybe a month or two ago, you really had to look outside of commodities or energy per se, and try to find anything that looked that, alluring in a sense to get you to feel bullish about anything in the market, because it all looked like the indexes, right? Either worse if they were NASDAQ growth names, or as bad as the overall indexes, right? Downtrends and chop. But you look now, and you got some real moves out there from large cap defensive names like a Merck, right? Which has been one of the leaders catching real good looking dated action out there, to a Wendy's, right? Or even like, it's not tech, right? We're just going to see less of tech because of what we're going through right now. But even there are going to be even some tech names that do okay. Again, it's not going to be the names we're used to seeing and that we're used to playing, right? And that's the point, I think, of the bear market cycle we're at right now, right? And I think that's a good segue. We talk about the overall market here briefly, and then we could get into some of the good stuff where sentiment's at right now, positioning, and we'll talk some more on names. But for the overall market, right, in comparison to what we've been talking about the last couple months or last month, nothing's really has changed, right? You had, without undoubtedly, Powell, for whatever reason, sound less hawkish than we're accustomed to, right? And it's not that he even said anything different, but based off the market rallying as it has, right? Based off financial conditionings loosening as much as they have recently, he would have destroyed, right? He would have done everything he could possibly can to cause some selling and risk assets, right? We've seen it in Jackson Hole. We've seen it several times, every single time up till now. I think what was different about yesterday was he didn't make it, it didn't make it his business to get that out there, right? The wording was different, right? It was less aggressive. And I think what the market took that as, and obviously ran with it, was that he's not looking, put it this way, right? Think about where we were at prior to yesterday. We basically were under the assumption that he was going to tighten and tighten and tighten until inflation came down to where it needs to come down. To hell with the economy, right? To hell with the market. It wasn't even on their minds, right? And, we started to hear some murmuring and chatter under the hood from some of the more dovish members, how they were concerned about over-tightening, but not from Powell, right? And then yesterday, it took a little different tone to where he said and made it known that he has no intent. He doesn't want to purposely break something, right? Where it wasn't a concern, you could almost sense that now it became a concern, okay? And I don't think that's a dovish pivot per se, right? The way bulls are trying to color it up. I just think it's something that a lot of us, just realistic players in this market were expecting and just didn't see it from them yet, right? They've been really aggressive in this tightening cycle, okay? They were caught with their pants down, as the saying goes, right? They had to get aggressive and play catch up, and they've done that, right? So a lot of people out there were saying now, okay, we understand you're playing catch up here, but you're at a point now where you're going to need to start to take it easy and look around and not just be all out hawkish with the rhetoric and raise 75 bips every meeting, okay? There's a lot of tightening already in the system. It's going to have an effect. We see it already having an effect everywhere but the freaking consumer, who's you got a kick out of it, but I mean, we're complete degenerates, right? We're the last ones that are going to hang up the towel when there's a slowdown, right? If we don't see it right in front of us, we're going to spend every dollar we have. And if we don't have it, we're going to bang out our credit and do whatever we can to keep the good times rolling. Right. Well, maybe I'm speaking for myself, Lourdes, but you know what I mean? Like we love to shop. I mean, that's what makes this economy, so powerful. But we're just not seeing the effect on the consumer yet. And it's going to come. It's going to come, right? We're going to see it in the job numbers. We're going to see it out of the consumer. And that's when a lot more answers are going to come out. That's when we're going to have a lot more evidence to see and evaluate where we're at. And I think basically that's the takeaway from Powell yesterday. He wants to now almost, instead of slamming on the gas here in an example of driving a car, take the foot off the gas pedal and just cruise a little bit and see what damage has been created around him, right? Interesting note out of Kalanovich, who Kalanovich usually leans more bullish than bearish, right? Overall, for those of you who follow Kalanovich, he's been wrong in where he thought things weren't going to get in regards to the market as bad as they've been, right? And, a lot of people see that Kalanovich has been wrong here on this call, and they're going to ignore him now, and without realizing that everybody's wrong. You know what I mean? Everybody's wrong. Kalanovich is a lot more right than wrong, and he's, smarter than anyone we know. I'll tell you that much. And he had some interesting, comments on that report last night where, he usually looks at the glass half full, and that's how you should look at this market. But he's seeing a Fed that possibly has gone too far here, and there are going to be consequences for that. And, he explained it yesterday. If you haven't read it, you should read it. He thinks we're going to see it sooner than later. But the timing of it, everybody's been wrong, including myself, right? If you told me at the end of 2021, the Fed was going to do what it did and we'd be here, right? Not even just in the market on the averages, the economy as well. I wouldn't have guessed it. Credit spreads would be where they are, and default swaps where they are. I would have thought something would break by now, right? That's what I'm used to. So the timing is always difficult on these things. Okay. And I think that's a perfect segue to where I think we're at. And if you've been coming to this weekly webinar, this weekly gathering, you can remember how I was trying to stress to you guys from my own experience. We got to get out of our heads trying to discover, are we at a bottom? You know what I mean? Are we going to go lower? Should we go all in? Everybody's looking for that all or none type move in either direction. And what I think we're at right now is we are in kind of a dead spot, right? I'm trying to think of a better term for it. I don't want to call it a sweet spot because I don't think it's that sweet. I think it's a dead spot where the Fed has done a lot. It's probably going to chill out, and we're not seeing the pain from that tightening in the economy yet, right? We're not seeing the wheels come off, right? We're not seeing the impact of these rate hikes and QT and everything else that's going on in the economy right now. Okay, so the longer we are in this dead zone, right? We have an opportunity to find alpha in individual names. I think while the market is more likely range bound than anything else, I think we could see more upside. You guys know I'm not a big levels guy. I don't really pay attention to levels too much, and especially in bear markets. But I definitely could see us trade higher than where we're at here. Because here's the way I think about it. And maybe I get a little too crazy with this stuff. You call me conspiracy theorist or whatever, but I think the main objective of this rally, this up move, is to reset positioning. You understand? I think the market had trouble going much lower than where we've been. I mean, we haven't gone anywhere in 6 months, right? Net, up, down, nowhere. And I think the reasoning for that, a lot of it is because people were already bearish. The pro side was already, they had de-risked completely. They had no exposure to equities. So you're not going to get, that cascade selling, that offside positioning, that margin call selling that you usually see when the pros don't even own anything. All kidding aside, mutual funds have been de-risking since last year. Hedge funds, you guys know, we look at them continuously. They still have no net exposure as a whole to equities. CTAs, right? Systematic funds have been short. They've been squeezed a few times, but have been mostly short for quite a while now, right? And even the retail trader has pretty much capitulated, right? The only one left, and again, we look at this every week, is that passive investor that thinks time is on their side for good reason, right? And who want to wait this out. And they're usually the last to throw in the towel, right? But besides that, we really needed to see something break, as we discussed, to see material downside from where we were at here. Okay. So to me, I think a lot of this rally, its main objective is to loosen up some of that positioning, right? Already a lot of shorts have covered, right? We've seen that already. And I think what's left now is to reel in some longs, right? And if you remember a couple of weeks back, basically when we started to come off the lows, we talked about how for this move to be healthier and last a bit, it couldn't just rally 5 straight days in a straight line and continue from there. It's not going to happen, right? We needed almost to see things marinate, right? We needed a bad headline, some selling to shake out some tactical bulls, right? And then that selling gets bought, we rally again, and then we chop around for a bit. And that's kind of what we've been seeing here. It's been exactly what we wanted to see in order to find enough trading opportunities in individual names. Okay. So I again, this is an opinion more than the fact. I still think we could see more upside here. Wouldn't shock me one bit, based off how this is materialized. Okay. But once positioning, we start to see that reset, and that probably is going to buy us time to where we start to see the impact on the economy. That's when I think we're going to need to reevaluate. And again, the evidence is going to be in front of us to see where we go from there, right? And who knows, maybe what comes after that is capitulation. I just think there are so many players in this game, right, that have the same thesis in a sense, right? They all feel the same way in a sense. And the only way to work that out is time. So we're kind of in this dead zone. The market's going to do its best to, fake some people out here. And then we'll see where everything stands come, the new year. But right now, based off what we're seeing, I think this can continue. And I think it could continue into the first quarter. Based off right now, the way positioning is, without a doubt, I can see this bullish phase into the first quarter of next year, right? Because even the people who were bullish were looking for a Santa rally and then almost like an instant sell-off come the new year, So I think, we got to see how that shakes out. And again, that's a perfect segue to look at some of, I think TD had today an update on one of their CTA model. But so you guys get an idea where we're at here and what's been going on. This is today's year. All right, and a lot looks like this. Where is it? Okay. So this is CTA position in the S&P 500, right? So systematic funds and how they're positioned. So this is what I was talking about earlier, right? This whole entire time here, these guys are sitting short, right? They already have a pretty sizable short position on. For them to add to that short position, something fundamentally would need to break, right? The VIX would have to explode higher. Something would need to happen for them to get aggressive and add shorts on top of that. And it just wasn't happening, right? So the longer this lasts and goes like this, you get these bear market rallies, which get them to cover, right? And I think this one, we're already starting to see some of them flip long, right? There are already some of these CTA funds that are flipping a little bit to the long side. All right, and then we'll see how things look into the new year and where they stand there. But this is TD's model, right? So every McElliott from Nomura has a different model. Bova now has a model. Goldman has a model, but pretty much it's in the gist now. Listen, people have a different opinion and theory on CTAs. How big of an influence do they have? See, in this current market, the way liquidity is being a bear market, especially, they move markets, because you don't have a lot of players involved right now, right? You look at all those charts, we look at liquidity, they look like shit, So when these guys come in, and remember, there's no opinion the way they work, right? When they need to get long, they get long. And that's why you see that almost that piling in effect, right? Because if the S&P goes over a certain level or the VIX goes under a certain level and they need to add exposure, they're going to add exposure. It's not going to be like, I'll wait for a pullback like we do, So when liquidity is low, like it has been, you see this piling in effect. And like these moves, right? These bear market moves that we've been seeing, I think a lot of that comes from these systematic funds, especially like these quick short-term moves like this, and you see it in the action. Like a lot of, you think of it, like everybody here, when we buy, right, when we get long, we don't want to buy like this, right? We want to buy some, it goes a little higher, we want to wait for some weakness. Like that's the human, generally, that's how he's trained to buy in this game, right? Nobody's buying 8 straight days up like that. But these are these machines, and that's why we see it more and more now. Believe it or not, Eric, that's an interesting question, because I get that question a lot. I was even asking that question a while ago. They've been doing well in this market. They do well in trending markets. They don't do well when in like corrections per se. Like I give you an example. Prior to this bear market, we would get a correction for like 2 months, if that, and then we'd rally back to new highs, right? So what happens is they would trim their long exposure. As soon as they got net short, that would be the bottom and the market would start rallying, and then they put on their longs again. But when you get a market that looks like this over the course of a year or two, right? And you're pretty much max long for a good portion of it, you're gonna make money. So big picture wise, they do okay, especially when the markets are trending. They're trend followers. That's what they are. So it's just it's a different style than what we look to do. That's what it is. But Nomura had a nice piece on it. I don't know if you guys in the steam room saw it, how they think, the CTA flows are going to be even more important next year. They don't think it's going away. They think these guys move markets and are only getting bigger because they've done actually well in this bear market relative to everybody else, right? They've been mostly short. Okay, so maybe they're not killing it, right? But they're not getting killed, and that's a lot better than most others in this market. So they're getting bigger, if anything, right? So anyway, the point before I went into this whole CTA discussion, the point I'm trying to make is that professional crowd has been too skittish, too bearish, and you're going to see little by little they start to get reeled in, not in a major way, but a lot more than they have. Okay, and if you remember another thing we've been talking about, and this is what I think fascinates me about the market. Remember, like when we started rallying off the lows here, and everybody was talking about how it's a bear market. Fine, we can play it, but it's a bear market rally. Don't trust it, blah, blah, blah. And I don't know if you guys remember, but I made the point that, even us, we didn't feel great about this rally, no way. But what we're going to start to hear, if this rally goes the way we want it to, is you're going to start hear about these green shoots, right? And one of them was soft landing, right? You remember? Like we were talking about here, where everybody was talking about the Fed has the worst track record in the world and breaks something every time. As this rally progresses, you're going to start hearing more about the Fed has a higher probability of pulling off this soft landing, and that's what we're starting to hear now. Everything that we wanted to see materialize in this rally for it to last, right? We don't know ahead of time, but as this rally has gone on, everything has happened. Well, think of it. Inflation, right, has gone the way for the bulls, right? The economy, manufacturing numbers have been soft, right? Housing has been soft, but all in all, no travesty, right? So you got the economy holding up. So you had basically the best of both scenarios, right, occur to allow this move. What's the matter? You can't, it's just Praveen? The rest of you can see? So you had the perfect ingredients for this rally to last, and that's why I think it's possible it could last. Now, disclaimer, okay, and again, most of you know this, but for anybody who's new out there, I just, for their own good, this is what we see right now in front of us, okay? Nobody in their right mind can forecast when this changes, right? You see everybody trying to, and almost everybody getting it wrong, okay? All we can do is, based off the evidence in front of us, try to get a feel for where we're at, play accordingly. Okay, so everything I'm stating right now is the way things look currently. Next week, we can hop on the Thursday webinar and we could be singing a totally different tune, bullish or bearish. All right, that's the beauty of this market, and that's the crazy part about bear markets. What else did I want to show you before we start talking about names? Oh, and this too, right? This was a tell for us, and still is. Nope. Okay, so here again, credit default swaps, they've pretty much been a mirror image, inverse mirror image of the S&P 500. Okay, and I'm repeating myself because some may be new. As credit spreads widen, right, raising the probability of defaults, it will weigh on risk assets and stocks, right? As credit spreads tighten up, okay, meaning healthier, lower probability of default, okay, it allows the market to hold up and trade higher, okay? So what's interesting here is we had this low here, right, where credit spreads widened out. So rewind to here. Here we're worried about something breaking in the economy, right? Think back to that conversation we had back then, if you can remember. You remember we talked about and discussed how if the Fed continues at this tight, being this tight, something's going to break, right? That's what we're seeing out of this, right? You remember that conversation we had? That the Fed has to take the foot off the gas or the brake, however you want to phrase it. But the Fed had to, exactly. The dollar was screaming higher. So you guys remember, right? Everything that was going on, something was on the verge of breaking somewhere, somehow, right? And you had here credit spreads, credit default swaps and spreads ripped to a new high, right? Signaling that same thing. But lo and behold, every time we get to that point, right, magically, financial conditions start to loosen. The Fed leaks an article to what's his face, right? Something mysteriously goes on where financial conditions start to loosen a bit. Okay, it's almost like someone's getting choked to death. The grip loosens up a bit and allow things to ease, right? And that's what we've seen right here, right? Market price action was trying to bottom, right? Still actually, if I remember correctly, was making a new low while swaps and credit spreads, right, allowed things to breathe. Started to trend lower, okay? So what this was telling us is that worry of the Fed being too tight and something breaking was alleviated, okay? Was loosening up. And that allows, as you can see in the past, right, that allows for risk assets to trade higher. And again, even more than the market, I think, especially from this point, individual names, you're going to see even more outperformance there, because the market from point A to point Z hasn't gone anywhere. But some of the names we're going to look at, right? Some of them you played, some of them we missed, and you're kicking yourself. Look a lot different than that, right? They've ripped, and that's why I think it's still important to focus on individual names from this point, and don't get wrapped up into the macro as much, right? Until we see something change. Right? Until we see something change. And we get together every week and we're going to talk about it. So it's not like it's going to sneak up on us. But, an example, you start to see credit default swaps start to widen out again, right? And you're going to see it start to weigh on the price action. That's signaling to us, all right, maybe something's up here, right? So instead of going and just buying, getting long individual names, that's where you want to build that watch list, as we were saying, to eye names when things start to ease. Okay, so that's where I think we're at. Right, I think it's going to go into early next year, maybe longer than that, very possible. But I think we're going to be in some sort of range, and the market's going to look like this. And I think under the hood, you're going to have some stocks, that look like that. Well, second half, a lot of people think this got pushed into the second half. If you go by the market to heal, and that's why you're probably mentioning that, right? Because we were talking about it. The market's pricing in the Fed starting to cut rates the summer of 2023, next year. Okay. So if you figure, again, this is the market, right? They're smarter than us. It's not, they don't have to be right. They're known, the market's known to change. It has already. But right now the market's pricing in rate cuts by the summer of next year. So that's when, if that's the case, right? If that stays on course, that means the summer of next year is going to look ugly. Right, as far as the economy and everything else, right? So you got, it's not a long time, but you got some time here before you need to worry about that, right? You got some stocks that have been beaten to shit, okay, where, you have some time now for maybe a bounce. Even more importantly, you have companies and stocks out there who aren't doing nearly as bad as people expected by this time, where now, you got some more time, right? and people are going to look and find bargains. So that's what I think we're seeing. Yeah, that's next call. Good call. The corporate debt pile up. That's a refinancing in the summer. All right. But again, that's what's in front of us now, guys. Okay. And you can't, especially in bear markets, and you see a lot of especially perma bears get caught in this. The bulls who get caught in this already are toast. But what you're going to see is you're going to see a lot of bears do what I'm about to say, and they're going to be toast when it's over. But you can have, it's okay to have a thesis, but when the evidence and the information starts to change in front of you, and you better be paying attention, you better change accordingly. You can't be stubborn. You know what I mean? You can't be stubborn just because your gut or something was showing you something, and you're getting the proof that that's not the case anymore. You can't be stubborn and stick to that, because you're going to get your head blown off. I mean, that's a fact. Right? The market, again, if you go by the market, which is the smartest mechanism on the face of the earth as far as factoring things in, okay? The market itself thought that the Fed was going to start cutting rates early 2023. Okay, that's initially what the market started pricing in. But then when inflation, if you remember, was a little stickier than expected, right? Was still pushing higher, and then Powell had to get more aggressive. That's when those rate cuts got pushed out into the summer, right? And that's why you're not seeing the economy, in my opinion, crack and crumble here, okay? Because we're still dealing with inflation. Inflation's been the problem. You understand? What the Fed is doing is deflationary. And when that starts to have an impact, I think that's where the real pain in regards to earnings, that's where they're going to come from. So again, we have some time here, and we look at this stuff every day. You know what I mean? We look at this stuff every day, and we're starting to see, right? Earnings have held up, and now, you know, we're starting to see cracks in several places. Just, it's almost like it's a slow moving storm, right? Like we all want it to happen so quick, to get it over with, most of us. Two, if you're bearish, to get paid, because that's where you get paid if you're placing bear bets. But this slow moving storm is a big pain in the ass, right? That's what it is. It's a big pain in the rear end. It's been so mechanical, orderly, but you know, we have no choice in the matter. Yeah, and you know, whether you're bullish or bearish, you want it fast, right? It helps everybody out. When this is the toughest type of bear market. This is the toughest. Yeah. All right. So anybody else have any questions before we get into names on positioning, anything we discussed just now? But anybody have any questions or updates that you guys were curious where things stand? Oh, let me show you. I know you guys asked, some of you anyway, for the Goldman diamonds. I'll show you those sentiment indicators. Hold on. Oh, I think it's under GS, hopefully. Of course not, right? Hold on. There we go. All right, so nothing major, but we're here now. So we've been slowly moving to the right. Okay, we've been in this vicinity here mostly. But you know, a lot of these down here, these are sentiment indicators for anybody who doesn't know what we're looking at. They were all pretty much washed out here. The only thing left that we've been talking about is this fund flow. And you guys have seen the charts. They don't budge. There's been no capitulation. Did we talk about that on Thursday? I don't know if we spoke about that on Thursday. But Goldman had an interesting piece. I think it was Scott Rubner, that said SPX, the level for that fund flow. How many trillion was it? What was the dollar amount? You guys remember better than I do. What was the dollar amount on the fund flow 1.5 trillion. Okay. Where it came into the market in 2021 is equivalent to SPX 4160. Right, Praveen? Do I have that right? Or close to right? Is that what we said? Right. So Goldman, that's what Goldman figures. Okay. The average cost of that, of the trillions of dollars that came into the market in 2021, the average price is around 4160. Okay. So now with this rally, we're basically, we're approaching almost, they're approaching almost break even in a sense on an average. So you're not necessarily, you're not going to see that capitulation here, okay, unless Putin hits us with a nuke or something. What's likely to happen is as we get into next year and the economy worsens and people start to lose their jobs, you're going to start to see some of the outflows come out. Now, again, just a quick point, in Europe, they've seen capitulation there, right? You've seen complete fund flow capitulation. All the money's come out of Europe, but they didn't have nearly as much, nowhere near as much go in, but Europe's been leading, believe it or not, this bull move, Yeah, so listen, the easy answer, okay, here's, the perfect recipe for the environment we're in, right? Here's the perfect recipe, okay? If you want to trade the more active tech names, basically the crowded names, okay? You want to find entries, if you're going to trade them tactically, when sentiment's on your side, okay? So when we get bullish sentiment signals, only then, that's where you're looking for entries if you're looking to play these things overnight, even on a short-term basis, okay? Otherwise, in my opinion, it's not even worth it, okay, for the crowded names. Even then, I think it's going to be a tough ride. But on just your normal days of weakness and chop, we want to pay attention to everything else in regards to flow. Literally, if the overall market goes in a straight line sideways, we want to keep an eye on any aggressive buying that comes into names that the average Joe is not paying attention to. Okay. And when we do get bullish sentiment setups, right? Because they're likely going to come, they shouldn't go away. Meaning, simply meaning that, let's say here, we top out and we get a week of some selling off China news or whatever, right? That's where we want to be a little more eager in looking for opportunities in those under the hood type names, okay? Because that's where you're going to have some tactical sentiment at your back, and you're going to have that new flow support to boost things when the market does bounce, okay? And, that's, again, a good segue to talk about names now. I know you guys have a ton of them that you've been eyeing. For me, if you guys have any new names, right? I know there's been a lot of squeeze names, especially in high growth. I know there's been some action in these squeeze names, but for me, it's not about that. Again, those are trades, and we can trade them regardless. What we want to start paying attention to, because that's going to keep us awake to any potential new leaders of the next bull market, whenever it may come. We want to pay attention more to the names that the average Joe has no knowledge about. All right. So just quickly, it hasn't been a lot of action, but we've talked about some of those names, right? Like a Wendy's. Okay. Again, I'm just talking about names that I've been tracking and following. Here's this tech name, Flex. That's had a nice move. The healthcare names, Merck has had a sick run already, but you got other names that look decent, like Bristol Myers, right? Look at this, right? ABBV, you guys know these names. So these are the names on dips and pullbacks. When you see action come in if you're interested, these are the names to look at, right? These are the names they're buying up left and right on any little dip. Oh, insurance names, right? Like that's a group. Who the hell? No one's paying attention to that group, right? Where's that one stock that we were looking at? A Progressive, I think it was, and then you got not that PGR Limited, right? Yeah, Progressive, Prudential. What else? Allstate, right? Yeah, look, and these things have been consolidating here. Some of these names. HRB, that was a new name that caught action. And you have even the more speculative names, smaller cap names. Like you guys remember this? I couldn't buy this name. I don't care, even if we were in a bull market, because I felt it was stretched. It's still going. This Extreme Networks. Remember the action that came in here? You remember we were talking about this little thing? Well, it's not that little anymore anyhow. It's over 20 bucks. Yeah, they're doing something right, huh? What other names? What other names? What have you guys been playing? Even just trading. What have you guys been doing? I gotta make things bigger because you guys are talking, and then I miss your what you say. Geo. I remember, and I give you guys credit. You've been talking about this for a while because you told me, what was it, Berry or whatever had a position in it. Is it? Yeah. This is a sick move. This is a sick move. Crazy. That. I think, Lulu, were you the one talking about this? This is another name that's been on fire. Yeah. NTNX, good call. That's still going higher. You know? So, and I get this question a lot too. Is it over? Right? Because, you know, automatically you see the rally, maybe we top out and consolidate or pull back here, right? Is it over? The thing to realize is that even though some of these names that have been run, like you got Wendy's into an upside niner here, right? Yeah, maybe this needs to take a breather, okay? But the trend shouldn't be over in regards to new names. We should see more names that sprout up. You understand? And if you remember, I was telling you, you always feel like you miss the first batch of names because the market's been so bearish that you're skittish. You know what I mean? So I always miss the first batch of names in a bear market that start to diverge and deviate from the overall market. But this trend should continue, even if it goes away from time to time. We should see it resurface. You know, and I think we're going to see. I think we're going to see more involvement. You know what I mean? Even on a sector basis, more involvement. Yeah, biotech is right. Listen, already, okay, you got this name that caught some decent action. They got bought out, right? You got these, you know, the big ones we talk about every day. They're more pharma than anything else. This SRPT caught a couple nice sweeps. Doesn't look like it's stopping here, you know. So the one thing you want to be careful about, I don't know, careful is the right word, but what you want to try to do, and you know this is working out right, when the companies that you're playing are legitimately quality. What I mean by quality is not Apple quality. I'm talking about profitable companies, and the stocks are moving higher for a reason. Okay. Some of them will be hyped up. Some of them will have activist or takeover chatter. But for the most part, the reason why they're going up is because funds notice value in them. You understand? They know that they think it's been overdone or ignored for too long. And that's why some of the money on the sidelines is starting to finally find these names. Like we were talking in the room, Lou, Merck, Merck has been a stud for a long time, right? It's had headaches, I think, with the painkiller, whatever. But for the most part, Merck is Merck. The problem with Merck has been, who the hell wants to buy Merck when you can buy some SPAC that's going to triple in 2 days, right? Who wants to buy Merck when Shopify is going to go parabolic this week? You understand? So what happens is when all that shit blows up and is dead, then the institutional money starts to pick up all the pieces when these things are ready to move. And that's why these things are getting gobbled up right now. Right? All these names, they're all quality names. They've just been dead money. And by the way, that's what a lot of people think big tech is going to be, dead money, right? So what else you guys got? Yeah, the tacky names, like, listen, this is where it gets tricky, okay? This is where the smoother ride should be, the names we're discussing up to here, right? The tougher trades, okay, and some of them have been decent because of the market rally, but the tougher trades are these, okay? Where the name catches some decent sweeper activity, all right, but is a hockey stick. You understand? And the problem is you don't know which is necessarily fun buying and which is short hedging or the other shit, right? These hockey sticks, even when they work out, even when you're right, it's going to be like pulling teeth more than not. Okay? It's going to be like pulling teeth, right? Where you see hold on, let me move this. You see moves like this happen in a Merck, right? Where no sellers. Here, you're not going to see that. Yeah, exactly, Eric. It's impossible to see that. Impossible. So you could play them, and my advice, play them only off decent action. Shop has had decent action. One of the few that's had decent action. But just expect that it's going to be tough. It's going to be tough in these things. Not getting easier. But pick your spots too. You know what I mean? You can pick your spots too. Here's another one. It just caught one bet, right? And we were talking about this in the room today. Okay. It caught a really good looking Feb sweep yesterday. Okay. But I mean, Jesus Christ. Like, this is the opposite, complete opposite of what the hell I want to buy. The complete opposite. But I get it. Look at this thing. It's been hammered, right? It's sitting here on the concrete floor. And what, you can't get a short squeeze to $30? You know what I mean? It's very possible. I wouldn't go nuts. And I'm talking about swing trades here, right? I wouldn't go nuts position trading in these things. They're painful. You take a shot. The stuff that you want to play, somebody just mentioned like gold miners, right? You could see that starting to stir up. There's been some nice action, right? And I don't, you're going to get more, you're going to get dips in gold miners. So I think the opportunity it hasn't gone anywhere. It just, it's off to a decent start. But I think you're going to get these shakeouts and pullbacks along the way. And if 2023, as we were saying, is a year for the gold miners, you can still make a shitload of money in these things. We just got to be smart about it because they don't go up in a straight line. Yeah, this name, bull risk reversal at the end of the day, and this guy. That's a pretty noteworthy bet for a miner. And it was January too, not that far out. So it was really interesting. So if you are playing the gold miners, I think there might be silver miner actually. Keep an eye on this SSRM. Oh yeah, that's a beast. That's a beast, that ENPH. Absolute beast. This thing's a beast. We've been seeing NEM, right? That's the stud of the groups, right? More of the blue chip name of the groups. I should say the more popular. This one, the names seeing the best sweeper activity. You got Barrett Gold, this SSRM, like we just said, that was today. Real nice action. AEM, some leap activity too in this AEM. WPM, that's right. Right? They all look similar. They all look similar. Yeah, Pass could have bet today, I think, again, didn't it? I could be mistaken. I think Praveen Pass could have sweep today. I know there was some protection in it. I think the protection was rolling anyway the other day, but today I think it caught a bet. Yep. Oh, it was a block? Oh no, I thought it was. Oh, it was a block today. April 30s. Here's Jan 16s. That was yesterday. FNV caught some action. More than likely, they're all going to move pretty much together. You know, just sometimes off the best action, you get a little more oomph. Like, I know I played this one before. This thing had a really nice rip when they started moving. I think it was over here, right? No, that couldn't have been it. Could it? Maybe. I don't know. But they all move together, so. Any battery companies, battery storage? I don't know at the top. Battery storage? What do you mean, like memory? Oh no, battery. Battery. Who's like for EVs? Yeah, I think Plug Lit is the ETF, isn't it? Or no? I don't know. But they Lit's the ETF. Yeah, charging station. That one. What this one do today? It didn't report numbers. It doesn't look like it's doing much. See the EV names again. I want nothing to do with the EV names. You know, nothing. There'll be a time where one of these EV names is going to survive and do well, and you're going to see it catch all the action. But right now, I want nothing to do with it. They're all bleeding money, losing money. You know, it's not the time now. Again, there'll be squeezes, but not the time now. What else we got? You know what's tough for me? It's always tough though. Like energy here is tough. You know what I mean? Like those type of stocks are tough. Oh, here's one that caught some action today. This is a Weyerhaeuser. You guys know Weyerhaeuser. I think Tree said the last time she bought it, there was a forest fire and she got burnt on it. No pun intended. But this is, you know, this is a stock for the environment. You know what I mean? This is the stock for the environment. They bought April's profitable name, right? Yeah, definitely profitable. Right. It's just funny you say that. You said that, right? That's like me. The one time I took a decent size position in a gold miner. I told you the story. They warned about earnings. It wasn't even earnings date. They just came out with guidance about earnings, and I got screwed. And all the other gold miners ripped. Think about that bad luck. You know? So that's why there's no guarantees in this game. You know, at all. I mean, what can you do about that? Like gold miners, I don't even pay attention to the earnings dates, let alone get screwed on earnings. You know, they don't move on earnings, for Christ's sake. Cano, that's an interesting play. And you know what I like about Cano's action today? The time behind it. Like it wasn't chatter type play, right? They're not looking for that chatter within front month action, and that's it. They went out with some time, and there was nice action there. And on top of that, you got a nice, it got destroyed it. You know, got destroyed it. So worth a shot. I sold HDMP to somebody. No, Praveen, not you too. I just told the story before, right when we were starting the webinar. One of my buddies did the same thing. Oh, not you too. What about Jay? Jay, are you on here tonight? I think Jay had it too. You know, a lot more people than I thought were in the stock. You know, I thought a lot of people traded it, but a lot of people just got out of it right before it. Damn. Oh man, what are you gonna do, Praveen? That's just, you know what I mean? That's just bad luck. Hopefully they even out. Yeah, the market's a bastard. Yeah, you know, and you hold it, and all of a sudden Powell talks about 100 basis point hike, right? And everything crumbles in front of you. Yeah, I can't blame you. I can't blame you one bit. But you know, you hope in the long run they should even out. They should. It feels like it doesn't, but you can't. You gotta try to just brush it off. What are you gonna do? But that would make me sick too, man. That's tough. That's really tough. But anyway, let's change the topic for poor Praveen. God, another one. That XZMP. More harm than good that thing did. Yeah, Coop. I know. You know, and think about this, in a bear market, Mark, it's gonna happen a lot because you're so skittish, right? Especially if you got a little profit or something and you want to get the hell out of it. And then you catch news, and it's irritating, man. Jesus. I know. Yeah, T, but you have to be. You have to be. You can't blame yourself for being skittish in a bear market. You know, you can't. I heard it again from a guy who's been in this game a long, long time. Like, he's getting old too. He's forgetting what he's saying. I saw him, Leon Cooperman, made a lot of money in this game. And he said, you know, he's, I think, up like minimally. He's basically break even this year. But yeah, you know, a bear market throughout his career, you survive. As long as you survive, there's no one better than you. That's what you got to keep telling yourself. You know, that's what you got to keep telling yourself. There'll be opportunities to make money. What a rip in this stock. This, and you see, and this is the other thing too. The stuff that we see catch really good looking action, right? You're going to see this a lot now in a bear market. We could see in a bull market, there's so much action, you can't tell anything from anything, right? They're buying calls all over the place. So it's hard to really notice something, okay? But when you see some good looking action come in, you have to take notice, especially if you like the name, because they can catch news a lot in a bear market, a lot. You know, believe it or not, a lot more than in a bull market, just because they're noticeable. But this thing, what a rip, man. I didn't even hold it overnight. I day traded it the next, what was it, the next day? The next day. And I had a nice hit on it. And then it ripped even more the following day. It was up like $4. Yeah, Coop. Mark, I didn't even remember that sweet Coop. How about that? I'm so discouraged by those names, you know? But especially if you have an interest in a name, you have to pay attention. You know, I'm talking about the good looking action here. I'm not talking about some, you know, jabroni sweep in weeklies. You know, if it's on a top bet list, or, you know, you notice a bet like Coop, you have to pay attention. You have to. Because that's what they're playing in a lot of these things. This thing I saw started to move. I haven't seen, I thought we were going to see more action come in. WK, remember this, Praveen? This was, I think, not risk reverse. I think it was bull combo was in this thing. And it was just giant 80, 100. See, you guys got a better memory than me. Oh yeah, Lourdes, that's what I'm saying. I'm telling you from experience. I missed so many because I intraday trade mostly. You know, that's all I'm doing. That's all I'm doing. So yeah, listen, that's right. I think that's what's changed for us. You don't want to go bananas, but you could hold stuff overnight now. You know, you got to be smart. But like T said, you're probably going to be skittish anyway. You know, and you're gonna be a little too quick, but that's okay. That's okay. Keep runners. Good call, Mark. Good call. Lourdes, listen, day trading is, for me, it's to buy time to play positions again. You know what I mean? Like, I know I'm not gonna make any type of score unless I get really lucky day trading. You know, it's almost like grind it out, hang in there, and then when I'm ready to build positions again, I'm in, you know, one piece. So that's mostly, it's to keep me involved and buy time, mostly. But sometimes you could get lucky, you know. Sometimes you could get lucky. But yeah, this WK had some really nice action. Oh, you know what? He had a couple names. Did we talk about this? This name had some weird action. Anybody have any info on this? Yeah, Praveen, I think that's what's cooking there. What's anybody know anything about this one? This is another hockey stick. Well, yeah, hockey stick. FRSH. This is software, right? So you think maybe something like this is why are they buying this? For some action, remember? Maybe. I would definitely keep an eye on further action in this name. You know, if they come in again, it might be worth, you know, it might be worth a shot. Might be worth a shot. And another one that really looks like shit that caught some, it looks like activist type action. This STNE. Like, this is awful looking. This looks even worse, right? Stone cold. Like, this is hockey stick, long hockey stick. But I'm telling you, the action that came in is no joke. Buffett in this? Really? Really? Yeah, Mark, that's the thing. It was, I'm telling you, like, it's hard to explain. It's the activist type action. You know, that's what it looks like. It's not speculation. It's not trading. It's somebody, you know, who's building a position in the name, you know, probably has equity and looking to utilize some leverage in the option market. You know, it wasn't, you know, somebody thinks STNE should bounce, you know, in a month. So, you know, it's just hard to buy these things. Because listen, you know what the problem is? If you don't catch the news, a lot of times you're stuck. You understand? That's the problem, right? Like, for example, this thing, right? Until you get the market to rally, look what you're stuck in. You know, and they're gonna try to shake you out several times. You know that on every down day. Oh, he's right. Look at this. I don't remember reading this. Buffett had a position in STNE. Wait, this is not that long ago. November 17th? Ain't that a bitch? I didn't even know about that. Damn, Praveen, you got a memory. Good call. Thanks for the heads up, brother. I mean, that's huge. So, you know, there you go. I was wondering what the hell, you know what I mean? Who the hell's buying this thing? Brazilian fintech. That's what it is. You know, this is somewhat interesting now, no? STNE. What an ugly ass chart, too. You know what's, yeah. You know what's crazy? Remember we were talking about hockey sticks? Like, when was it? In the summer or spring? Remember, they all look like hockey sticks now, right? Remember we were talking about hockey sticks? When people were talking about these things bouncing? Hockey sticks. That's what they all look like, right? They all look like freaking hockey sticks. It's amazing. Look. What other? So let's go to the stuff you guys like to talk about. What other names beating down the TSM, right? No, semis too have been pretty strong, right? Let's see, TSM. Wow, that had a big squeeze. Semis. You, you got to buy them on dips. If anything, it's tough to chase here. Have we seen any action in the semis at all? Like any notable activity that nothing, right? Oh, you know which one had decent action? This one, right? Didn't this one have a couple on? Well, look at the chart. This is a whole different animal, right? TSM, see, TSM always catches size. You're always going to see some size action. But you want to see, trust me, when they're buying TSM, I'll be talking about it. They're buying. Like they come in 20 million, yeah, $20 million worth. But you'll always see size orders in TSM, calls and puts. It catches some big action. So you got to kind of wait for that flow wise if you're interested. But outside of like NVIDIA weeklies and stuff like that, I don't remember any other semis catching any decent action. AMKR, that's right. That's under the radar semi. I think Rambo caught a little bit of action, right? Rambus. Look at this. Look at this chart. You see these stocks? You see what they look like? Yeah, man. So that's, I'm telling you. And what's best is, Lourdes, when we do get a little pullback, and that we may get that soon here. Who knows? I'm talking about just a little bit of a pullback like this. That's going to set up, yeah, reverse hockey stick. That's going to set up new names, new action. You know what I mean? This was the first round. What we're seeing now, all these names we're talking about, that was the first round of buying that came in, So when we see the market breathe here a bit, that's when you're going to start to see some more buying, and hopefully it's going to be in a lot of the names. Because there are so many names that have been ignored for a long time. CNK caught some action today. Not a lot of money, but caught a couple sweeps. Wait, CNK? Yeah, CNK, the movie theater, right? This is movie theaters. You know what else caught some action, Praveen? I think they do pretty similar. IMAX. Some short-dated action. GSK, they were buying this blood. They were even a little early, and they're still buying it. They were buying down here. Later, T. And they're still buying it. But yeah, this has upside. This definitely has upside. What we got to try to do now is we got to try to catch these things on dips, because they've run. A lot of these things have run already. Let me see this one. This one looks dangerous. No. And you talk about stud. This is a stud, right? ABBV. I mean, already had this sick move here. And this is just normal, look at digestion here, right? And look at the numbers on this thing. They reported $3.66 for the quarter. You got real numbers here. This is no bullshit. 14 billion, 15 billion for the quarter. This thing's a monster. ABBV. Yeah, so that's what I'm saying. If you get a little breather, you don't even need a little breather, do you? Maybe a little consolidation here. You got that little mini cup and handle you guys like. Damn. You know, and again, they're real names, man. That's, you know, the majority of these things are real names, real names. Woodstock? Oh, you get a dividend. Oh, yeah, yeah. You get a dividend on a lot of these things. Yep. What else? There was a stock I was trying to remember now, that I wanted to show you guys, and I forgot. $6 dividend? Eesh. Oh, this name finally got out, right? Finally broke that. Where's who is arguing with me? Get him on here. Remember who was that? I would never buy BTU. That thing's in a downtrend. Easy downtrend, right? What was he talking about? This here? Or something like that? Or this? I don't know what the hell we're talking about. BTU. New highs. You know, and energy coming off. Right? And you see, like I remember BTU having issues when energy was bad. You see the numbers on BTU. Look, they reported $2.34. The street was expecting $1.79. Coal, yeah. Isn't coal dead? What the hell's going on? They're printing money over here, Eric. Mid-September, it was a risk reversal, right? I remember, Praveen. Mid-September. Yep. Yeah, you know, Eric, you realize that every time with the elections, well, not every time, but a lot of times, like the focal point, it gets hot early and then goes dead. I remember with like who was it? I think the steel stocks with like Trump. They always have a tendency to do that. That's the market at its best, you know. Oh, we didn't even talk about that. What about China? What do you guys think about China? There are a lot of reputable bulls that I follow who like China. You guys know China scares the shit out of me. You guys know that. I've been saying that forever, but yeah, the China Trump, every day the market was selling off on that, Eric. Oh, Jesus. That trade war. But yeah, China, it's not even China itself. The names here, listen, like we said, you play them, you don't go crazy, because you talk about catching a bad break. You catch a bad break in a China name and you're buried, right? So first of all, I know a lot of people are buying the equity here, and I think that's a hand grenade. I really do. I think you got to be careful. I think these are made for calls, made for calls. You know what I mean? If you like one of these names, buy them with a little bit of time, and your principles, your risk, try to stick with that. But you buy equity in these China names, oof, that's dangerous. That's dangerous. That is dangerous. But I tell you, there were a few of these names, they caught some action, and I hate China. They looked interesting. You know what looks like a great lotto? This guy. TAL. You guys probably don't even remember. You remember how hot these stocks were? The education names? I remember when they were trading at where they are now and got hot. I remember when they weren't hot, and then they got hot, and now look where they are. Yeah, remember the China got in the middle of these things, and this one and this, they were two money printers, EDU and TAL, and look at them now. Let me go to a weekly so you can see. There was no better stock than these. You bought every dip in these things. It was easy money. No split. China changed their business model. But this TAL, oh my God. See, this is what I was talking about with the TAL. I remember when it was coming out of this and got hot. Look at this move. And now it's back to where it started. But this, the reason I say a decent lotto, this name had some interesting action with time. Let me see if it's in open interest. TAL. Come on. Oh, no wonder. There we go. So what do you got? Jan? No, that's not it. Jan? Weren't they like $5 calls? Oh, it was for maybe it was for this January. No, I'm checking on the CBOE open interest, the optional open interest. The only ones I see the Jan 2023 $5 calls. I don't see anything further out. I thought they were 2024. They're not, unless they closed. Yeah, Eric, I don't think there's no way to know. You know what I mean? I think it's just they're all risky. You know, that's the assumption. That's the conclusion you got to come to. They found Jack Ma in Taiwan or somewhere, not Taiwan, Japan. Yeah. They found Jack Ma. He was hanging out with the Afro guy from Fran Bankman-Fried from FBF. SBF. By the way, I watched like 5 minutes of that interview yesterday with him. One, I don't know what the f he was saying. I'm being honest with you. I don't even know what the hell he was talking about. The shit he was talking about. FTT coin, collateral, what the fuck? I don't know, they just created shit out of thin air, this whole crypto shit. Yeah, and basically he was making it out to be like he had no clue what was going on, obviously. You know what I mean? But, and maybe, yeah, exactly. Maybe there was something bigger going on and he didn't know what was going on. But I'm saying just what he was talking about. Like, it's not easy to stump me. I've been in this game a long time. You know what I mean? It's not easy to stump me with anything on Bloomberg or CNBC these days. I literally was lost in space. 10 minutes in, I had no idea what he was talking about. No idea. No idea what they were doing. I still have no idea. You know, they created, like, let me ask that. I just want to, because I don't even know who to ask. They created their own Bitcoin, their own coin, and used it as a token. I got to get the lingo. So they created their own imaginary token, and they used that as collateral. What? Oh my God. This is going to go down in the history books, right? I mean, probably, you can't say ever in this game because it gets bigger and bigger. It might be the biggest bubble ever, no? And he's not in jail. He's doing interviews from the Bahamas, Sal. What the? Yeah, but I'm telling you, this crypto shit, it boggles my mind how much money went into this stuff. You know? How much, I can't, where all this money come from? You billions of dollars into these imaginary tokens created by people. Yeah, he looked like he just woke up out of bed. He's not worth 2 cents. The guy's worth billions. Yeah, well, yeah. There's some, reputable big shots who got taken full, but what a mess. I just, I had to tell you guys that I was completely lost. You know what I mean? I had no idea what he was talking about. No idea what he was talking about. I got the gist of it with the hedge fund Almeida, whatever the hell it's called. You know, I got the gist of it, but I just I couldn't get my brain wrapped around. What blew the tokens blew up? Is that what blew? How did they? How could they use their own token they created as collateral anyhow? Who? But you know what it is? It's unregulated shit, right? So you could do whatever you want. That's the thing. It's unregulated. There's no insurance, no nothing. Right? Who's going to stop you? They traded people's money, yeah. But supposedly only in Europe, right? Europe and maybe Asia or whatever. It wasn't here because I guess they were looked at. I don't know. But yeah, exactly. Right. Yeah, it's just insanity. But see, again, it's just a generation of investors and players who just aren't aware of this stuff. See, my generation, if you're going to send any real money, to a brokerage firm to do anything, you better be some insurance. If the firm goes under, is my money insured? Otherwise, anybody could just get up, walk away, and take your money, right? I mean, common sense. Yeah. Like, would you send your money to JP Morgan if your money wasn't insured? Broker could take your funds and run away, and you never. Who are you going to call? So, but this generation, they, again, that degenerate gambling mentality, that's the last thing on their minds, right? They want to know about how much money are we going to make off this thing? Am I going to get rich or what? Can I be worth a couple million walking around my flip flops and not brush my hair? Is it possible? All right, that was their goal. Yeah, you're exactly it, Praveen. They have no, you know what I mean? No etiquette, no respect, no. They just, and somebody made a good point. They tarnished the industry. Maybe that's what gave the whole industry a bad rep. Right? It was these people. They just took it too far, and they are allowed to take it too far. Why wouldn't they? But yeah, I just had to say I was lost in space in that whole interview. The NFTs, how those things doing? I still see them on Twitter and shit. I see people talking about an NFT they bought and who's coming up with NFTs. It's still out there. It's still, you know what I mean? Hasn't blown up completely yet. And I saw, I still see press releases of a new token coming out. So there's still probably more damage that needs to be done across that whole industry of Bitcoin. And it's not Bitcoin. See, like me, all guys like me, we look at Bitcoin for everything that's going on. It's got nothing to do with Bitcoin, right? This stuff is not Bitcoin. This is made up Bitcoins. I still don't know what a Bitcoin is, but yeah, shitcoins. All right, but what else? Anything else before we wrap it up? Hedge funds, let's see how they play this week. They covered. Sharpies have been trimming into this rally because specs have covered their short. You understand? So what we've had is, if you guys remember, speculators, the riffraff, as we like to call them, they've been short throughout this whole entire thing, basically. Right? They covered a tiny bit into this rally, not a lot, and then they just added it back on. So they've been short for quite a while. And into this rally now, the specs have covered their short meaningfully. So what you have now is the Sharpies taking the other side of that, trimming their long, not in a big way, but trimming their long into this rip. So the next signal from Sharpies is going to be whenever we get a pullback and you see specs adding shorts into it, what do Sharpies do? And now you see why Sharpies just stayed long, right? I mean, look where we are. You know what I mean? They're not like us. They're not trading this shit. You know what I mean? Right? They look good here. They look bad here. Net. Gatsangul. You know, so that's why. They just, I mean, basically, guys, the way we were all talking about the Sharpie positioning was pretty much, I think we were right on the money there. They basically, the signal off Sharpies was that for this to really break, okay, there would need to be a catastrophe. You know what I mean? Sharpies were betting that barring any catastrophe, this, you know, the market's not going anywhere. The problem was how much upside can you get with the Fed doing what they're doing? But that was what the Sharpie takeaway was. So now we'll see. It's going to be interesting because when we do get a little reprieve here, when the market does sell off, you know, for a couple of weeks on some negative news, and you get, let me show you so you can see what I'm talking about with specs. You know, but it takes a pair of coconuts to do what Sharpies do. Like it's easier said than done, right? The chart doesn't even do it justice. You're gonna get aggressively long here, right? This is where they got super long. Okay. And you're gonna hold through this. You know what I mean? Can we do that? Like, do we want to do that? You know, it's just they're a different animal. Let's pull them up here. Hold on. Where's the net position? All right. So this here, all right, that's that aggressive long here. And now look where they are now, right? It's off a bit, but not to where specs are. I'll show you specs in a second. All right. Remember this, they covered their big short position into this move. Then here's the zero line, by the way. Then added a tiny bit of short exposure on. But then after this pull, that's when they stepped on the gas, right into the, literally, right? What the kind of line is that? You know what I mean? Right into that. And, you know, they've been hanging in there. Now, and the only reason I think this is even off the highs like it is because of what the riffraff has done. Here's what the riffraff has done. Oh, I got to go to riffraff. Where the hell's the riffraff? This is like, there's no, oh, you know what it is? It's in a thread. Maybe that's why. Here we go. There it is. Here's riffraff. Okay. So this is the riffraff specs, as we call them. Right. And then they got, I mean, uber bearish into these lows. And then they covered. They're still tiny bit short tiny bit. Yeah, I mean, listen, the riffraff, it depends what kind of riffraff, Eric. You know the riffraff that really got killed? The equity trading riffraff. If you look at, I don't know if you've seen some of those charts I posted, they're walloped, they're gone. The traders, for the most part, are dead. But the futures players and the passive players, they're still hanging in there. Wait, where's the? This is part of a thread too. Hold on. I think I'm having signal issues. Okay. So this is what is estimated profit and loss. Oh, it got chopped, this chart. What good is that? I didn't see that. Oh, the clown emoji. That's why. You just reminded me. It's the clown emoji. That's why I can't search it. I got to start putting a name on it with the clown. I can't just use the clown. Oh, wait. Maybe I could do this. Hold on. Watch this magic. No? Son of a gun. I can't copy and paste an emoji? You son of a... That's all right. Anyway, the no magic, no magic. The retail trader is, as a whole, is dead. Is dead. They're dead. Look at the names they own, right? I mean, you look on Twitter, if I had $1 for every time somebody said buy the dip in this thing, I'd be a gazillionaire. I told you guys the stories of this. I know of clowns loading up on this thing on the way down. Loading up. You know what I mean? Yeah, all the ARC names. So they're buried. They're buried. That job is done. We need, let's look at it to spook us as a good reality check before we wrap it up. We got to look at it. Okay. We need these guys to capitulate. Carvana, that's another one, Sahil, exactly. We need these guys here. Look at them. They're cocky. You understand? So, like I told you guys, Goldman, what they came up with is 4160 SPX level is their average. Yeah, opposite Hockey's thing. Their average cost in the market. So what will it take for these guys to puke? They do it all the time, guys. I know it seems unrealistic. That goes back further than 2016. I think I just posted one. I think, Eric, I just posted one because I remember it might have been you asking for it. Somebody was asking me for it, and I finally found one. But I'll look to see if I can find it. And if I do, I'll post it. But basically, oh, this is ETF. This is just ETFs. Normally, right, when you're in a bull market, okay, especially the start of a bull market, what it's going to look like is this. See how the blue line here, the dark blue that we're looking at, okay? That, when that happens, you buy every correction, every pullback you possibly can. That's what you do. Okay? Every pullback, especially at the early stages of a bull market, you're going to have people calling for Armageddon on every single pullback and every little mini correction. And you just buy it. You hold your nose and you buy it. Okay? Because this is the wall of worry that keeps a bid in the markets. When you have this, okay, and you're seeing sweeper activity in call sweeper activity in names and constructive price action in names that you like, you buy the dip till you turn purple. This is always the final chapter of the bull market. Okay, right? So think about that. Every pullback, okay, without this is high probability of a correction. Now, I'll give you an example, okay? COVID was an exogenous event, right? Now, if you guys remember COVID, it was a vicious sell-off, but short-lived, right? Because all that money is on the sidelines. You understand? So it happens quick, and you get these V-shaped recoveries. But when you have fund flow in the stratosphere, those V-shaped recoveries, they don't happen. They don't happen. They don't last. You know, they don't last. I mean, plain and simple, you don't get the start of a new bull market, right? The odds that you're going to get the start of a new bull market would disappear, very low, very low. Very high. The odds, yeah, very low. You know what I'm saying? Yeah, it's not realistic, you know, and that's the way you got to look at things. Like, again, it's hard for anybody to say, oh, if this market breaks this, then it's the start of a new bull market. If it breaks this, you know, this market could go anywhere. We can go test 4,200, 4,300. You know, there could be a scenario where we test 4,600. But what's likely to happen is you're going to see a lot of the same names, they bounce, but then we're going to make or test lows again. You know what I mean? Tomorrow, jobs, yeah, should be interesting. Yep. So that's the problem. But when you get fund flow capitulation, which leads to this, right? No, look at that. So think about this, just off this chart. And I'm telling you, it was like that even prior. 2016, all the way to 2021, think about all those rallies, all those rips, all those winners. There was never any material fund flow. Right? I'm serious, Eric. I'm dead serious. You know, Hartnett from Bova, the Flow Show, talks about this all the time. All the time. Like if you did a back test, I think if I'm not mistaken, there hasn't been a V-shaped recovery ever without fund flow capitulation, according to Hartnett, if I remember correctly. Oh, how haven't they puked up? You know what it is, Eric? It's not that bad out there. It's not as bad. I'm telling you, it's not as bad. If you think about what we're talking about here, okay? We're talking about people who basically own the S&P 500, okay? The average on that $1.5 trillion is 4160, okay? As an entry. Think of it as just a stock or SPX trading, okay? You own it at 4160. Is it that far-fetched that you're hanging in there right now? Right? With no unemployment, you know, nothing but Bitcoin breaking. You know, and you hear it, like you hear it. Good, turn on CNBC. If you have time, just hang in there, right? If you have time, just wait it out. You're gonna hear that change when they're capitulating. You're gonna, you know, they're afraid. Yeah, exactly. Quality, or you see how that cracked it. It's only, people didn't think it would. It's only a matter of time. It's the fun. Listen, the same way that you can't make the case for capitulation is, think about it, the same way people never saw this coming. You had people saying, oh, retail's dead. Retail's never coming back in. 2008 destroyed retail. You'll never get that money, right? It's always the final chapter of a bull market, and it was. And the final chapter of a bear market, we're more than likely going to see all this money come out. Yeah, not only did they didn't flinch, they're adding. You know what I mean? They've added, Eric, which is ridiculous. You know, listen, I don't know if you've been through the 2000 tech bubble blowing up. You know, it was the same mentality, Eric, on the way down. The same mentality. I watched, see, I watched, Eric, you wouldn't believe. I watched people hold all the way, literally, to the last minute when there was nothing left, literally to zero on things before they threw in the towel. Even worse than now, even worse than now. They were so trained to hold and add on, they were so trained to buy pullbacks because they would be rewarded. All they had to do was wait it out. The market did such an unbelievable job of brainwashing them to the point when 2000 it blew up, they didn't, like you're saying, they didn't flinch. They wouldn't flinch. They would not flinch. And then, if I remember correctly, 9/11 got them to flinch. 9/11 is when they started to sell some stuff. You know, that's what started to spook them. Yeah, exactly. You're right. If you held Amazon, you'd be a rich man. But if you held, toys.com or whatever the fuck it was, CMGI, you'd be on the street corner with a cup. Again, I don't know if 2008, I don't know if they go back that far, but if I find it, Eric, I'll post it on my regular Twitter and private Twitter. You know, but let's see how it plays out. Let's see. All right, we're going to remember we had many discussions. Let's see what it takes. It's going to be fascinating to watch, right? It's going to be fascinating to watch. And I hate to tell you, because you guys know I'm not this perma bear doom and gloom scare tactic type dude. You guys know that. I'm actually called a perma bull, so the complete opposite. But there's always something. There's always this exogenous event that comes out of nowhere that gets into the middle of these bear markets. You know, like 9/11 happened. You know what I mean? Like some crazy geopolitical shit or whatever comes out of nowhere, and gets the job done. You know, and I guess it's the cycle of life, right? I mean, it's only a matter of time before something happens, but it seems to happen in bear markets, and then feeds into, the selling with everything else. But it's gonna really be fascinating to watch this one, because this is crazy. Yeah, there's always something. Oh yeah, China, Taiwan. The scary part is there's so many balls in the air these days that, right, you can foresee shit happening. But a lot of times it's just something that wasn't even in the cards, comes out of nowhere. Like 9/11 surprised. That's what was so scary about 9/11. You guys remember? Nobody moved for days. They were watching the TV. We were waiting for what was going to blow up next. It was ridiculous. The stock exchange shut down. Remember they gated off the block. You couldn't even get on the block. Yeah, it was crazy. So, it's not shit I want to see, but bear markets, it's weird how it happens. You get these crazy things going on. Hopefully it's not something like that, and it's just, fear of speculation blowing up. But usually it's something else. Have your bunkers ready yet? For now, Lourdes, we try to make a little bit of money in individual names, right? But have that bunker heated and all and set. Yeah, get prepared, Eric. If you buy a farm, let me know. I'll come chill with you. I like farms. Peace of mind. Soup and ammo. All right, everybody. Always a pleasure. Enjoy the rest of the week. Friday, Hartnett tonight, by the way. Hartnett update. We'll see what he has to say regarding the rally. All right, but I'll see the most of you to mañana anyway. The rest of you have a good night. I'll see you next week.